Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is July 18 and we're starting from euro-dollar pair with Jakub Novak as usual. Market players ignored the inflation data in Italy and speech of ECB President Christine Lagarde. Considering the empty macroeconomic calendar today, there may be a rise in euro towards new monthly highs after several unsuccessful attempts by sellers to trigger a downward correction. For long positions, buy euro when the quote reached 1.1258 and take profit at the price of 1.1298. Traders will continue to push the quote higher as the downward correction failed. However, when buying, the MACD line should be above zero, or is starting to rise from it. Euro can also be bought after two consecutive price tests of 1.1234. But the MACD line should be in the oversold area this time, as only by that will the market reverse to 1.1258 and 1.1298. For short positions, sell euro when the quote reached 1.1234 and take profit at the price of 1.1189. Pressure will increase if the quote returns below 1.1242. However, when selling, traders should make sure that the MACD line is below zero or is starting to move down from it. Euro can also be sold after two consecutive price tests of 1.1258. But the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.1234 and 1.1189. The next stage of our review is the next major, GBP USD. This trading plan is presented by Petar Ikimowicz. GBP USD has been trading upside this morning, but we found rejection of the key resistance at the price of 1.3105, which is a good sign for the potential downside movement. Due to the potential change in trend dynamic from bullish to bearish and the rejection of the resistance cluster, Petar sees potential for the further drop towards lower references. Downside objectives are set at the price of 1.3055 and 1.3000. RSI oscillator is showing bearish divergence, which is good confirmation for the downside movement. Key resistance is set at the price of 1.3105. What about long-term trading plans for GBP USD? Arif Makmur describes. If we look at the weekly chart of the cable, you will see that there is an upward correction, where this is confirmed by the price moving above the MA10. And the CCI indicator managed to penetrate from the bottom up 3 levels and respect the center level, so as to emphasize that buyers are on the weekly chart in control. They are enough to dominate GBP USD, but after successfully breaking below the 1.2847, It seems that in the next few weeks, GBP USD has the potential to weaken to 1.2471. But as long as the decline does not exceed below the 1.2307 level, then GBP USD still has the potential to rally up again, to go to 1.3748 level. Let's try to hunt for seller stop losses with Andrei Shevchenko. Instrument gold. Following the strong bullish momentum at the beginning of the month, gold closed with a pin bar yesterday, indicating the likely continuation of the upward trend. The target price should be the seller's area last June. In this situation, market players should pay close attention to long positions and, at the very least, temporarily limit short positions until the breakdown of 1985. The trading idea came from the price action and stop hunting methods. What about mid-term trading plan for USD CAD? Area of Markmore describes. With it successfully breaks below CCI indicator 3 level on its daily chart of USD CAD, as well as its EMA 50 and 200 has crossed the death cross in the bearish pitchfork channel, giving an indication that the loonie is controlled by sellers on the daily chart. So based on the above facts, in the next few days, as long as there is no significant upward correction that goes above the 1.3288 level, then USD CAD has the potential to drop down to test the 1.3091. And if this level is successfully broken down, then the next target is the lower line of the bearish pitchfork channel. And finally, here's Laurie Bailey with USD JPY pair focused. Let's have a look. The Japanese yen continues to trade within a wide range. Yesterday, it closed more than 140 pips above its opening level. We can assume that this was a battle between buyers and 3 technical resistance: the target level of 138.78, the blue line of the price channel, and the 23 Fibonacci retracement level. The daily trading volumes for the pair were below the daily averages, while those for other major currencies were either average or slightly above average. In fact, there was no significant struggle in the yen's case, although we observed good volatility. However, the yen crosses GBP, JPY, Euro, JPY saw increased volumes, but the day ended with minor results. As a result, we can assume that the USD-JPY pair will continue to have a pull through its cross rates. Consequently, we expect the price to reach the target level of 140.35, which almost coincides with the 38 Fibonacci retracement level. On the 4-hour chart, the price is consolidating around 138.78. Yesterday, the balance indicator line limited the pair's growth, indicating that the growth was corrective. Therefore, reaching the nearest target at 140.35 falls within the framework of a correction, which requires increased market participants' attention. In addition, the MACD line is approaching the 140.35. This level, and the downward movement towards the target of 135.15 may resume from that level. But if the price consolidates above 140.35, it will bring back the uptrend towards the target of 142.30. That's all for today. See you online soon. Good luck.